CFTC, they just announced a crypto CEO forum to launch digital asset markets pilot right here. And it says they will hold a CEO forum of industry leading firms to discuss the launch of their digital assets pilot for tokenized non-cash collateral such as stablecoins. And participants will include Circle, which is USDC, Coinbase, Crypto.com, MoonPay, and Ripple. So further information on the CEO forum will be released once the details are finalized. And they're saying the CFTC is committed to responsible innovation to deliver on the Trump administration's promise of ensuring that America leads the way on economic opportunity and making America the crypto capital of the world. The acting chairman has previously proposed a CFTC pilot program as a U.S. regulatory sandbox to provide regulatory clarity for digital asset markets and ensure that robust guardrails are in place. And also the CFTC's Global Markets Advisory Committee released a recommendation last year by its Digital Asset Markets Subcommittee on expanding the use of non-cash collateral through distributed ledger technology. So in all of my videos, I said the spending power to the dollar is going down. Cryptocurrencies, distributed ledger technology is going up over time. And so this brings me to the conversation that I had with Grok here on Twitter, AI, saying that volatility is the price you pay for opportunity. So can you explain how the US dollar is more volatile on the macro than the crypto market over the last 10 years? And so that led to a long-winded response of macro trends, using metrics like the US dollar index, the DXY, the DXY, central bank interventions, monetary policy adjustments, and then comparing the data of both of them together, such as the spending power that the dollar has lost over the last 10 years, and the percentage that total 2, which is the crypto total market cap excluding Bitcoin, is up over the last 10 years. And the main response was that the statement that the US dollar has been more volatile on the macro scale than the crypto market over the last 10 years is not supported by the available data or economic analysis. And so I pretty much took all of the data and economic analysis that Grok gave me and said this. Over the last 10 years, the US dollar has experienced a significant loss in purchasing power due to inflation. Grok also said the US dollar has lost approximately 25% of its purchasing power since January of 2020. This would imply a notable decline over the last decade, considering the acceleration of inflation in recent years. And then I said, and to think that data is from the last 5 years. You also said, in quote, since 1971, when the US dollar was no longer backed by gold, it has lost over 96% of its value. That is crazy, 96%. It suggests a trend of continuous devaluation. On top of that, you also said the total cryptocurrency market cap excluding Bitcoin, often referred to as total 2, has seen a substantial increase over the last 10 years. Within the last 5 years, the increase is approximately 1,320%. Who knows how accurate that is? You guys can fact check AI here, but all time the growth is noted at 3.4 million %. So if I Google the definition for volatility, it does say liability to change rapidly or unpredictably. So the crypto market in the short term adjusts very rapidly and unpredictably. That's why we see it drop 20% over the course of a week. So in the short term, more volatile definitely than the US dollar. So then my question was this: if the US dollar has lost over 96% of its value since 1971 and the crypto market total 2 is up 3.4 million % within the last 10 years, then would you admit that you're wrong? And so then it gave me a long-winded response here saying that I'm right to point out the discrepancies in the previous explanation. And then Grok did clarify about volatility versus value loss and the difference there. So about the speed and unpredictability of price changes over short periods versus the loss of purchasing power due to inflation is a different concept, which actually is a great nuanced point that I want to talk about in this video before we get into the charts here. Because I then asked, if you were an investor, where would you keep your money long term? You only have two options in this scenario, the US dollar or the crypto market. You can't hold both, you can only pick one. Then as always, it gives me a long drawn out generic answer, so I have to prompt it to be more specific, saying I didn't ask for a long answer. Write one word, US dollar or crypto. And Grok said crypto. So I said fill in the blank. The crypto market is less what in the long term than the spending power of the US dollar. And so the crypto market is less predictable in the long term than the spending power of the US dollar. And so the predictability here is the downfall of the US dollar and the reason why crypto is what Grok would hold long term, because predictability in the spending power of the US dollar over the long term stems from several factors like historical inflation rates over long periods. Especially recently, the Federal Reserve's target range of around 2% inflation annually provides a benchmark for expectations to make the US dollar's decline in value over time more predictable, along with monetary policy, the Federal Reserve's actions on interest rates, quantitative easing or tightening. So I'm not going to get into a whole history lesson here of all of this stuff. The main point to focus on is this. When I ask Grok, where would you expect the crypto market to be over the long term? Don't give me a it depends type of answer. If you really could make a calculated guess like your life depends on it, give me that answer. And so given the current trajectory and historical data, if my life depended on making a calculated guess, Grok would predict that over the long term, the crypto market would see significant growth with a total market cap exceeding 20 trillion in today's dollar value by 2040, and then gives explanations for this like adoption rate, technological advancements, regulatory clarity, inflation hedge, market maturation. And then I want to get even more detailed here because he said over the long term based on today's dollar values. And I said, what would that be in 2040 US dollar value? And that gives me this long equation right here and says $27 trillion. So where is the crypto market right now? Well, it's at $3 trillion. So that's a 9x from right here for where everything is at. So when we look at the charts in a little bit, the trap that's being set in the short term is to shake out people who cannot hold for the short-term volatility. And then the long term, based on the devaluation of the dollar, is the reason why volatility is the price you pay for opportunity. So in the short term, the crypto market's very volatile to the up and to the downside, but over the macro, the dollar's dropped 96%. So it's predictable volatility. So if you think crypto is bad, imagine holding this crap coin right here, 27 trillion supply. Maybe, who knows? We just know the Federal Reserve keeps printing more, so there's no supply cap. 25% was minted within the last 6 months. 1% of holders own 30%. It's lost 96% of value since its creation. Even more than that, that was just since 1971. It's literally backed by nothing because there is such macro bullish news coming to the market with what's happening with Donald Trump, Elon Musk. For example, both Elon Musk and Coinbase's CEO have now proposed putting all U.S. spending on the blockchain. This means $6.9 trillion of U.S. spending per year would be placed on a decentralized ledger. What does this mean? Well, first, it's important to understand how blockchain works because a blockchain functions as a decentralized digital ledger where data is stored in blocks that are linked together in a chain. This means that the US government spending would by far be more secure if implemented properly on the blockchain. But why is it more secure? Well, because when data is stored in these blocks, it becomes a part of an uneditable digital chain. They can't just be lost in wiki links or emails or whatever it is that Hillary Clinton did. Ledgers can be permissioned to restrict viewership, and fraudulent spending is almost instantly flagged. It is also virtually unhackable if done correctly. Furthermore, the blockchain could be publicly accessible to increase transparency. And currently, the US government's spending database is built in an append-only way. This makes searching for specific words in the database virtually impossible. It is not transparent, and that's why Elon Musk created the Department of Government Efficiency. For example, after weeks of digging through data, Doge found this: 62 contracts worth $182 million, which were entirely for administrative expenses. This includes a $168,000 contract for an Anthony Fauci exhibit at the NIH Museum. This is only the tip of the iceberg here. Look at this. The US Pentagon couldn't account 63% of its $3.8 trillion of assets in an audit. It's hard to believe this 2023 press release is real. The DoD says they have $3.8 trillion in assets and $4 trillion in liabilities. The balance sheet doesn't even balance correctly. Because if you have $4 trillion in liabilities and $3.8 trillion in assets, you're going to go bankrupt quicker than a homeless dude. By using blockchain technology, payments would be easily tracked and audits could even be automated. So, what do you think Elon Musk would want to do with the Department of Government Efficiency to audit and track spending? Well, of course, they're going to do this on the blockchain. It is not only the best solution, but it's pretty much the only solution right now that they have, because audits could even be automated. This is why many large banks are already using blockchain technology. And even Jamie Dimon of Chase says blockchain technology is what they're focused on at Chase Bank. 56% of cross-border businesses have integrated blockchain technology into their operations as of 2024. And the US Pentagon spent $1 billion to audit just their 2018 financials and failed the audit. Their goal is to pass an audit by 2028. That's $10 billion in costs, which could be cut from multiple government agencies if blockchain is utilized. So blockchain removes inefficiencies. Also, another benefit would be eliminating ghost beneficiaries. Blockchain could ensure that aid programs, pensions, and Social Security are received only by eligible individuals, reducing fraud. In 2022 alone, there were 13.6 billion of improper Social Security payments. The biggest downside is that the plan would be met with unprecedented resistance, which is why they've been hating on Elon Musk from the mainstream media, saying, how could an unelected person get in there and start making all these things happen? So we're going to be seeing legal barriers and resistance from the bureaucracy like never before. This is already started as federal judges have restricted Elon Musk and Doge's access to payment systems. So resistance will come from the beneficiaries of these inefficiencies, the people that are getting paid off. For example, over 322 billion of taxpayer dollars have gone to various 501c3 organizations per Data Republican. Most taxpayers have no idea this money has gone with 724 billion of total contributions. That's insane. It's almost $1 trillion right there. You see other cash contributions, indirect government monies, total taxpayer dollars. So if the US government wants to eliminate deficit spending, we need to cut 5 billion of spending per day. The US is now spending 44% of GDP per year, the same levels as World War II. Most will be surprised how many problems will be fixed if the deficit spending is eliminated. And more disruptions means more opportunities for investors. So investors who can adapt to change will find the market to be highly profitable. And by moving US spending to the blockchain, it's going to help build efficiency, security, transparency, because by 2030, Deutsche Bank estimates there will be over 250 million blockchain wallet users. And so the amount of people that are to be coming on chain is going to be massive. And as banks have the ability to custody crypto and allow people to buy crypto directly in their bank account rather than going through Coinbase, then the speed and the efficiency of bringing in the masses into the crypto market is going to skyrocket. And so with Donald Trump talking about the sovereign wealth fund and also appointing David Sachs as the crypto and AI czar, listen to this.
The feasibility of a Bitcoin reserve, you said that's being studied. It's one of the first things that's on the table here. What goes into that process? Is that something that would be standalone, or is that something that could potentially be tucked into, say, a sovereign wealth fund, which has been the speculation today on the heels of that executive order?
I guess it's possible that the sovereign wealth fund could decide that they want to make Bitcoin or digital assets part of its portfolio. You're going to have to ask the incoming Commerce Secretary Howard Lutnick about that. The item that President Trump asked our working group on digital assets to study is whether it's feasible to create either a Bitcoin reserve or some sort of digital asset stockpile. And so we're going to be looking at that question. We haven't committed yet to doing it, but it's one of the first things we're going to be looking at.
Now, also, he just recently had a press conference that Brad Garlinghouse reposted saying this.
We're coming off, frankly, 4 years of arbitrary prosecution and persecution of crypto companies where the SEC wouldn't tell founders what the rules were, but then they would prosecute them. And many founders have even told me stories of being debanked personally just because they had founded a crypto company.
So what do you think he's talking about? He's talking about the Ripple versus SEC lawsuit over the past few years. It's the largest lawsuit in history in the crypto market, with one of the most powerful crypto companies that has the third largest cryptocurrency, XRP, which is the second largest altcoin at $141 billion market cap. And Elon Musk said so true to David Sachs saying that Doge engineers are working around the clock. What could they be working on? Check this out.
Any fun anecdotes from Doge you want to share?
I'll give you one anecdote, which is I've been working late here a number of nights at the EOB. And I won't tell you where the Doge guys are based, but I know where their office is. So I just went by there to say hi. The whole room was full of young coders. I think they were engineers, but they were wearing like suits and ties. So that's a little different. But they were all working really late. I mean, they're working there late up Friday night. And the facilities people don't know what to do because they've never had people like asked to stay late on Friday night before. So they've had to create new facilities access for these guys.
So when Elon Musk came in and purchased Twitter, he pretty much fired everybody. And so Elon Musk is coming in and pretty much getting rid of all of the waste and draining the swamp, so to speak, in the government for all the inefficiencies. So hate on Trump all you want, hate on Elon all you want. The facts are the facts. It's only a matter of time before adoption takes place globally, and we're seeing it happen right in front of our eyes. The time is ticking. For example, Cboe Exchange filed to list and trade spot XRP ETFs for several issuers, and so Brad Garlinghouse just put this little clock emoji. It's only a matter of time before an XRP ETF gets approved.